Good morning, traders. So this is your Dow Jones daily review. So yesterday we got another inside bar, and I think let's just zoom in. So just explain what I'm talking about here. So pretty much there is my bar. Okay. I typically don't pay much attention to the tails. Okay. So I'm really just look at the body. So you can see this body here fits inside this bar. This body here fits inside this bar. This body here is only just started, but it is also looking like it's fitting inside this bar. So this is a typical bearish pattern. The way to play it would pretty much be a break below the inside bar, which is off a level which is 26,122. So that level gives way, then this pattern is validated and you're looking for shorts. Okay, so there is another way of looking at it, and I'm going to point that out on one of the lower time frames. Let's just see if a 4-hour work. So the other thing that we have here is a flat top triangle. Okay, so my trade from the day before yesterday is, well, basically stopped out. Stopped out with this pin bar here, because I'd already moved it up. I'll show you where I moved my stop loss up to, but it's fine. Stopped out with a little bit of profit. And now we're waiting for some kind of pattern to play out. It's pointless trying to, play the scalps off this thing, because if you short, you can see how the buyers are stepping in on this trend line at the moment. Okay, so let's just get to the hour. Just want to drag that across. Okay, so one thing is very clear. We are breaking above the level, and I'm just going to fine tune it to find an area where we have a lot of tails. So you've got 1, 2, 3, 4, 5, 6 tails there. Okay, so all of this price action here from this long bar here is all after hours. So it could indicate that we have, we're trying to get above it. Okay, or it could just be a little bit of, a little bit more confusion. Okay, oscillators themselves, we've got pointing down. It's not really giving me anything else. The awesome oscillator at this stage is also just hovering around the zero line. So the only positive part here is we're staying above the zero, which is still giving us comfort for the long. But for me at this stage, technically we should still be playing the long, because there is a bit of a triangle, or you could call it a range. So I think a range is probably a better way of looking at it if you look at the hour. So you can see low, higher low, lower low. But anyway, this is ranging. It's inside a range. And the big question is whether we're going to break out. If we do break above this 26,286 area, that is going to be pretty significant, because you're going to get a pretty strong rally, especially after a consolidation like this. Okay, so the rule of thumb would be, and I'm going to be conservative, you could come from this fractal, but I'm coming from this fractal here. That would be your measured move. Okay, a break above this consolidation phase, that would be your measured move, which takes us to 26,800, I think. Yeah, 26,815. And if I come to the daily, that pretty much matches the previous highs. Okay. So, and as you can see, if you look to the left, you can see swing high, swing high, swing high, swing high, swing high, all on the daily, and now we're hovering inside that swing high zone. Okay. So, from a technical point of view, we need to be looking for longs. Obviously, I want to be looking for longs lower down, not really looking at getting long up here. It just will hurt you. And I was anticipating a break of this area here. So let's just get all this nonsense going. So if you look here, from there to there, we had a low, higher low, higher low, and basically what I'd be doing is just moving my stop below these fractals on the 30-minute. So stop was sitting here, then we got a new fractal, moved my stop below here, and got stopped out with this bar here. Okay, did manage to get back in long here for a bit, but got out of it, and you can see which is probably a wise decision because we fell off again. Okay, so we are getting pin bars at the bottom, but we are getting some tails to the upside, so 50-50 touch and go at the moment. The other thing that I just want to highlight at the moment, and I'll just use this. So we are creating higher highs, but we are creating lower lows. So that is a megaphone, and megaphones typically will come down, buyers will step in off there, sellers will step in off there, and they'll keep driving this wider and wider and wider until eventually there's a breakout one way or another. Okay, so right now I'm still of the opinion we should be looking for longs. Want to be looking for longs lower down, and until we get below this area here of 26,125, I'm going to stay with that theory. So buy at the bottom of the range, so anywhere down the bottom here where you see price action starting to indicate a turn, you're in, and you're taking profit at the top for now. Okay, until we get a proper break, and we can't count this as a break, but pay attention to it because it could be. Okay, but we can't really count it at this stage. So we want to see, basically we want to see a bit of a pullback. But what could be driving this is you could have people in the know about something that's happening, and the minute the futures market opened, they were buying, and then you had your short players playing the top of the range that stepped in and drove it down again. Okay, then you've got more buyers stepping in, and you've got a few more buyers coming in here at the moment. So, to me, it just looks like the anticipation is to break this range to the upside. That's just kind of what I'm looking at the moment. But I think the safest bet right now is trade the range. So long from the bottom, short from the top, until we get a decent half-hour green bar that closes above. And I wouldn't just say the range. I would look for the high of yesterday. So there's a high of yesterday. So I want a half-hour bar close above 26,300. Okay. And that would give me the confidence that we need to start looking for longs, and then your stop is going to be below the bottom of the range. That's going to be a pretty big stop, 200 points, but make sure your position size is small and scale it in as it runs away. Okay, but a breakout here is going to be pretty telling. I just want to pop across to the Bollinger Bands quickly. I want to see this on the daily. Okay, nothing really on the daily. We have had a bit of a squeeze and a bit of a breakout. 4 hour, we are coming into a squeeze. So what I'm referring to is when the Bollinger Bands come together like this, there's normally indication of consolidation and a breakout's about to happen. And you can see whenever my oscillators here are grouping to the downside, that's indicating a buying opportunity. So we are above the 20 moving average as well. And let's look at the hour has been ranging for a long time, and nothing really on the half hour. So there's nothing really here to write home about. But I think just looking at the clean price action here, you can see the buyer stepping in inside bar. This pattern here is pretty much a double bottom, and a break above there, which we have had, which is a break above the range, is also an indication that we need to look for longs. Okay, so there's more merit for a long. Obviously what we want to do is trade off the bottom of the range So if it does come back down here, we trade with the bottom of the range. Otherwise, break up, come back, test this level here, and then we get in long. Okay, so still looking for longs, just not here, rather down the bottom. And for now, take profit at the top of the range until we get a breakout. Okay, anyway guys, that's it for me today. I hope that helps, and I'll catch you later. Cheers for now.